Bank Negara Malaysia (BNM) and the Securities Commission Malaysia (SC) play distinct but complementary roles in building the Malaysian sukuk market. BNM focuses on monetary policy and financial system stability, while the SC is responsible for capital market regulation, market conduct, and investor protection. They collaborate through closely, particularly through the Malaysia International Islamic Finance Centre, to ensure a comprehensive and coordinated approach. BNM and SC play different roles in building the Malaysian sukuk market. First, regulatory authority. BNM regulates and supervises banks and financial institutions involved in sukuk to ensure financial stability and effective risk management. Meanwhile, SC regulates the capital market by setting rules and enforcing compliance for sukuk issuance and trading to ensure orderly markets. Second, sukuk issuance oversight. BNM manage and support the issues of government sukuk by ensuring smooth auction and efficient settlement, which help establish benchmark pricing. At the same time, SC approve and oversees corporate sukuk issuance to ensure adequate disclosure and regulatory compliance. Third, market stability and investor confidence. BNM maintains liquidity and stability in the financial system to support smooth sukuk trading and reduce systematic risk. Meanwhile, SC enhances investor confidence by enforcing transparency, disclosure, and market conduct rules. Fourth, Sharia governance. BNM ensures Sharia compliance for Islamic banking and financial activities through its Sharia Advisory Council, providing consistency in Sharia interpretation. In contrast, SC ensures Sharia compliance for capital market products, including sukuk, through regulated Sharia advisors. Finally, market development and growth. BNM develops financial market infrastructure such as payment and settlement systems that support efficient sukuk trading. Meanwhile, SC promotes sukuk market expansion through innovations such as SRI sukuk, greater participation, and improved market transparency.
Malaysia's sukuk market did not grow by chance, while private sector innovation played an important role. The single most important catalyst for its development was the Malaysian government direct involvement as a sovereign sukuk issuer. First, the government issuance of sovereign sukuk such as Malaysian Government Investment Issues or MGII created a credible benchmark yield curve for ringgit-denominated sukuk. This benchmark is essential because it allows corporate issuers to price their sukuk accurately, reduce information asymmetry, and lower issuance costs. As a result, long-term institutional investors like pension fund and takaful operator gain confidence to participate. Without this risk-free reference point, private issuers would have faced higher uncertainty and weaker demand, limiting market depth. Second, the government role had a powerful signaling effect, particularly throughout Malaysia's first global sovereign sukuk issuance in 2002. This move demonstrated strong political will and regulatory commitment to Islamic finance. It reassured international investors that Malaysia was a credible and Sharia-compliant jurisdiction, encouraging multinational corporations to issue sukuk locally. More importantly, it repositioned sukuk as a mainstream financial instrument rather than a niche alternative. From a Maqasid al-Shariah perspective, government leadership spotted maslahah or public interest by mobilizing ethical capital for national development, infrastructure, and social stability. The emphasis on transparency, risk management, and Sharia governance align with the objective of preserving wealth and promoting justice. In conclusion, while private sector initiative was necessary, it was government issuance that laid the foundation, built trust, and catalyzed sustainable growth, making Malaysia a global leader in the sukuk market.
Next, for question 2, how did sukuk in Malaysia evolve from a naked Islamic instrument into a mainstream financial tool? The evolution of sukuk structure in Malaysia reflects the country's effort to develop a capital market that is both Sharia compliant and market-oriented. Over time, sukuk evolved from a simple asset-based structure to more complex partnership and hybrid arrangements. In the early stage, ijarah sukuk was the most widely used structure. Why was ijarah preferred? This is because it is based on the leasing contract with tangible asset backing, which provides stability and reduce Sharia uncertainty, thus increase investor confidence. As the market matured, Malaysia introduced partnership-based sukuk such as mudharabah and musyarakah to reflect the Islamic finance principle of risk-sharing and ethical wealth creation. However, higher business risk and uncertain return limited their appeal among risk-averse investors. So, how was this challenge addressed? Malaysia responded through financial innovation by developing hybrid sukuk structure. This combines multiple Sharia contracts such as ijarah, wakalah, mudharabah, and musyarakah. Wakalah in particular play a supporting role as an agency-based contract that enhance flexibility and efficiency while maintaining Sharia compliance. Overall, this evolution demonstrates how financial innovation has enabled sukuk in Malaysia to become a mainstream and globally competitive financial instrument. Thank you.
Today, I will talk about Malaysia's first green sukuk and how it plays an important role in Islamic finance and sustainable development. Malaysia was the first country in the world to introduce green sukuk. It was created to raise funds for environmentally friendly projects such as renewable energy and green infrastructure. The green sukuk is linked to real green projects, for example, solar energy projects. This means the sukuk is backed by real assets, not just money lending. The money collected from investors can only be used for green projects. This makes the investment transparent and ensure the funds support environmental protection. Next, let's look at how investors earn returns. In green sukuk, returns are not based on interest. Instead, investors earn income from profits or rental income generated by the project. These structures follow Islamic finance principles and avoids riba. The green sukuk follow Malaysian Sustainable and Responsible Investment or SRI sukuk framework. This framework sets rules on disclosure, reporting, and environmental impact. Now, let's look at the Sharia compliance of green sukuk. First, green sukuk does not involve riba or interest. Instead of interest payment, investors earn returns from profits or rental income generated by the green projects. Second, green sukuk is asset-based, meaning it is linked to real assets or real activities, not just money lending. This is an important requirement in Islamic finance. Third, the use of funds is halal. The funds are used only for ethical and environmentally friendly projects, which are allowed in Islam. Lastly, green sukuk is approved and monitored by a Sharia committee to ensure continuous compliance. It is also support Maqasid al-Sharia by protecting the environment, public interest, and society. Finally, let's look at the impact and investor appeal. Islamic investors are attracted to green sukuk because it is Sharia compliance and promote ethical and sustainable development. At the same time, conventional investors are interested because it functions like a fixed income investment and meet ESG goals. Overall, green sukuk bridge Islamic finance with global green finance and strengthen Malaysia's position as a global leader in sukuk and sustainable finance.
I will briefly explain a 10 years roadmap on how Malaysia can leverage blockchain technology to sustain its leadership in the global sukuk market, especially as competition from GCC countries and Indonesia continue to grow. This roadmap is divided into 3 key phases. First, phase 1 focuses on building digital foundations and regulatory supports in year 1 to 3. Malaysia should expand the regulatory sandbox under the Securities Commission Malaysia and Bank Negara Malaysia to support blockchain based on sukuk issuance. At the same time, smart contract can be tested to automate profit distribution, redemption, and Sharia compliance monitoring. Clear guidelines for digital and tokenized sukuk should also be introduced to ensure investor protection and regulatory certainty. Next, phase 2 cover market expansion in years 4 to 6. At this stage, Malaysia should develop a national blockchain sukuk platform to improve issuance and settlement efficiency. The introduction of tokenized sukuk with fraction ownership can attract retail and smaller international investors. Blockchain can also enhance transparency by securely recording asset ownership and transaction flows. Finally, phase 3 focuses on global integration and leadership in years 7 to 10. Malaysia should develop interoperable blockchain platform for cross-border sukuk issuance and trading. By integrating with international markets, Malaysia can reduce cost and settlement time. Ultimately, Malaysia can position itself as a global hub for digital sukuk. In conclusion, by adapting a basis blockchain strategy, Malaysia can future-proof its sukuk market and maintain global leadership over the next decade.
To maintain Malaysia's leadership in the global sukuk market and rising competition from GCC countries and Indonesia, Malaysia must actively diversify its sukuk segment. First, infrastructure sukuk should be centered as a long-term national financing tool. Structures such as Ziyarah and Istisna are suitable for long-term project like transportation, renewable energy, and digital infrastructure. With standardized framework and limited governance support during construction, Malaysia can attract a long-term investor such as pension fund and takaf operator. Second, retail sukuk can enhance market resilience. By expanding digital and low domination sukuk, Malaysia can mobilize domestic saving, promote their financial inclusion, and reduce risk on violate foreign capital. Third, SME and mid-market sukuk should be developed to address financing gap faced by smaller business through simplified issuance and credit support. Finally, cross-border and multi-currency sukuk will strengthen Malaysia's role as a global sukuk gateway. Overall, diversification and innovation are key to sustaining Malaysia's leadership in the global sukuk market.